Hello and welcome to the Thursday trade right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. We gauge expectations. That's for the impact as President Donald Trump ends the Power Africa program. And Ghana is reversing its order for ENI SPA to merge its offshore oil field with a local producer's discovery, possibly ending a 5-year dispute. And gold edged lower today, pressured by a stronger US dollar and rising treasury yields. It's good to have you join us. I'm Ladi Williams. Let's get a check on what's playing out with most of the markets that we track now, starting with oil. The prices have climbed for the first time in 3 days today, with supply worries resurfacing after U.S. President Donald Trump announced a reversal of a license given to Chevron to operate in Venezuela. So we're seeing a big jump there, 0.94%. That's for Brent, $73.21 a barrel, while the U.S. grade, that's up also a big 0.87%, but still below the $70 psychological level. That's for WTI. And let's get a check on gold now. Most of the metals that we track, we're seeing gold, with the big drop we saw yesterday. That's continued, taking the price further away from that $3,000 psychological level, $2,912. That's for spot gold. 0.10% down too. That's for the gold, U.S. gold futures, $2,927. Spot silver, not shining, not staying bleak, just unchanged there, $31.84 an ounce. And we see platinum and palladium matching the drop we see for gold today. And the Nigerian interbank settlement system says financial institutions they lost a whopping 52 billion naira to fraud in 2024. According to the latest report, the amount lost to fraud has increased by 196% over the past 5 years, in parallel with the growth of financial transactions in the digital payment sector. The report adds the annual fraud counts decreased by 31% from 101,000 in 2020 to 70,000 in 2024. And the amount lost to fraud grew by 350%, rising from 11.61 billion naira to 52.26 billion naira within the same period. And as the Senate concludes its 2-day public hearing on the proposed tax reform bill, Nigeria's attention is now shifted to the House of Representatives for the next phase of the hearing and recommendation. According to the Chief Executive Officer, Financial Derivatives Company, Mr. Bismarck Rouhani, the issue of compliance by taxpayers remains a major part of some concerns over the tax reform. We're speaking earlier on Business Morning. Take a listen.
Nigerians are probably the least tax compliant set of people in this region, because only less than 8 or 9% of the Nigerian people pay taxes in it. Therefore, and that's income taxes. Therefore, the country is left with no choice but to use what we call the benefit approach to taxes, which are easy to collect and easy to administer. For people to come out and say, please do not introduce or do not increase value-added taxes, when you know that there are lots of exemptions on these taxes, makes it, it's quite confusing. So I think that we are just going through the process of negotiations. The unions are making their voices heard. Traditional rulers are saying some things here and others. So I think that I'm quite confident that in the next few days, the tax reform will go through, subject to the amendments that are being discussed, and therefore we move on and ensure that, one, the incidence of tax falls on those who can afford it, and two, that the amount of tax collected actually increases, thereby increasing our tax to GDP ratio to where it is. We are way below the average across the world, in fact much lower than most of our African countries and peers.
And now to our first conversation. Well, a lot coming out from the Trump camp at this point. The President of the United States, President Donald Trump, ending the Power Africa program that was designed to boost electricity in Africa. Let's get an idea on the possible impact of all of this and the way forward now. Joining us is Kofi Macaulay, is the CEO of Shower Energy Resources Limited, joining me from Sierra Leone. Great to have you on the show.
Thank you. Good afternoon.
Yeah, so first I'd like to get your reaction to, when you heard this news, because at this point we're seeing the big boys in the world now cutting all kinds of aid, coming into Africa. I'd like to get your reaction to when you first heard this.
Surely it was shocking, and after only a few days, you do realize across the country that this initiative had a lot of impact across so many sectors, all the way from education, health, energy, water, and does have a huge impact. But I must also say that we still believe that this process is under restructuring, and that at the end of the day, we will continue to benefit from this initiative because we believe that there is a U.S. component which basically benefits the U.S. So if you look like in the energy sector, most of the consultants would be U.S. based. You have in large projects, you have U.S. institutions who would be first in line to provide debt or even be given the access to provide equity in these projects in Africa, which is beneficial to the states. You have an even more diverse area, which is reference to technology equipment, which again, when you do these projects with all the initiatives, U.S. companies have they have access to, for and foremost, be first in the line to be able to get into these projects. So we really see it as a restructuring phase, and that at the end of the day, when the review will be done with all the benefits from both sides, this is something that would continue going forward. But definitely, there's a huge impact, but I think it's going to take some time, as time has been given for a review to look into the whole matter as to where the plus and minus are, and we really believe that there are a lot of pluses on the U.S. side. So basically, the way how you look at this is a lot of the support, particularly again in the energy sector, are basically setting the right structures in place, making projects bankable. And in doing that, you allow the U.S. companies and U.S. interests have access into these projects based on have international standards and will be able to invest.
All right, so talking about the
feelings,
Mr. Macaulay,
but at the same time believe there is still.
All right, Mr. Macaulay, I lost you for a moment there, but I guess I have you. Okay. All right, I guess I have you back now. I lost you for a moment, but we're talking about the energy sector. Talk to me about what segment of the energy sector was getting attention, through this project. Was it mostly for renewable energy?
And both in the government and private sector across board getting support and have be able to put projects for bankability, which again allows U.S. companies to basically come in and invest. So basically the point I'm trying to drive home is that we don't believe it's all lost. We believe there is restructuring ongoing. End of the day, when all these support bring to the table, in turn allowing further investment from U.S. companies and technology and their equipment being used in the energy sector here in Sierra Leone in particular would allow these aids to basically continue to do what they're doing, as they're not just open grants which go out, but do connect and bring in something back from the U.S. companies.
All right, so, going forward, though, we're seeing a lot of investments on aid, being cut back, investments in renewable energy. Like this morning, we heard oil giant BP, they're looking to reduce their investment in renewable energy and they'll rather put that money into boosting oil and gas production. So, at this stage, it's looking like 2025 might get lean for most of those investments. What do you think Africa should be doing right now in a situation where most of these aids being cut off and investments in renewable energy? What should we be doing?
Yeah, so I don't believe we should stop the train. I believe that we should keep on pushing whilst we're observing the market. It might be a temporal fix, temporal changes, but eventually, in the long run, you can't go wrong with renewable energy. So definitely, I will encourage other investors look at things strategically, particularly which are not too long-term investments, to actually go into them and keep on pushing on the renewable energy projects. A lot of the renewable energy projects takes a lot of years to develop. So basically, just stopping halfway there is not helpful, but keep on pushing on it. And I think at the end of the day, like today, you have interconnection between so many African countries with the Transco, CLA lines. There's a lot of collaboration that has started off where you have strengths on one hand. You could have one country who is strong in solar, another country strong in hydro, another country strong in biomass, and energy can transmit through different countries. It's still a long road, but I think we must basically stop because of that. And I think what we should also be doing is basically making our case. And that's why you'd see my messages constantly being the same, in the fact that there's benefits for both sides. What we need to do is maybe pull these benefits out and show them better, so that we are assured of these needed aids to be able to push these projects to go forward. That would be my advice in ensuring that we get there. And I think we can do it. But we should not, we can't start and stop and start and stop. I believe in the long run, what we're seeing now is going to be temporary. It might be 5 years, it might be 10 years, but it all revert back to renewable energy.
Yeah, definitely. We'll keep tracking the progress of renewable energy in Africa and, for the world at this point. But it was great having your perspective. Thank you so much. That was Mr. Kofi Macaulay. He's the CEO of Sewa Energy Resources Limited. Thank you so much. All right, now let's get to our next conversation now. It's a new year, definitely. The year is moving along quite fast now. We're in February is coming to an end. We're looking out for March, at this point. But let's get a check on what to expect. That's for the business environment. And eliminating waste in the business is a crucial step towards achieving operational efficiency, reducing costs, and promoting sustainability. In today's competitive market, companies are under increasing pressure to optimize, their processes, streamline operations, and minimize resource consumption. Well, let's hear more now from a specialist in this sector. We have Seyi Obadimeji, he's a product manager. Hello, Seyi, great to have you.
Thank you, Ladi. It's good to be here. Thank you.
Yeah, so tell me now, what will you say are the most common types of waste in, business operations that you've noticed, in your line of work, and how they can be effectively identified and eliminated?
Okay, so thank you, Ladi. And again, it's good to be here. So waste in business processes takes so many forms, right? Excessive paperwork, manual approvals, duplication of work, and even unnecessary waiting time. These are typical examples of waste in business processes. And of course, many businesses still rely on inefficient manual processes that slow down productivity. For instance, I can say that even in government offices and some corporate institutions still require physical signature for approvals, right? Resulting in long delays, having to wait multiple times before you can actually get a document even signed off. So inefficient inventory management is also another thing, which again, it's common issues, not just in corporate organizations, even in manufacturing, especially in retail manufacturing, and where poor demand forecasting leads to overstocking or even stock out of these products. So other examples with real life scenarios are basically more into recent tax programs that was implemented by the Lagos State government. Previously, before now, businesses and individuals would have to always visit FIRS offices physically and file tax returns, and just imagine that long process of even having to file your tax returns. This process led to long queues, wasted hours, human errors, and of course people have always complained. And good enough, the government is always a listening government, right? And of course there are lots of improvements that have been going in various sectors, which have brought in the tax pro max, which helps in the e-filing of tax submission, which now is even much more better, thereby reducing paperwork and of course administrative delay. There are also tons of examples in the banking industry. You will recall that before now, you would notice that you would always have to go to the bank, even for just fund transfers, right? But today, you can sit at the comfort of your home, pick up your mobile phone, or go on the web and do a fund transfer.
Yeah, Shay, it's quite interesting you mentioned that, because I just thought about it myself. When last was I in a banking hall? Feels like ages at this point. I guess that's a big improvement, I guess.
Yes, it's a lot of improvement from where it has started from. And of course, changes, right, is not just immediate. Of course, it's always gradual, hence why we always need to do a lot of process improvements within our organizations to remain efficient across board.
All right, so let's imagine you've identified waste in your business operations. You've been able to eliminate part of it. But how can businesses measure and track waste reduction progress to ensure long-term sustainability and efficiency improvement?
Okay, so technology, right, and automation are like game changers for business efficiency, right? With robotic process automation, cloud solution, businesses can actually eliminate waste in processes like customer service, financial transaction, and of course, supply chain management. For example, AI-powered chatbots have, significantly reduced the need for human agents to actually handle repetitive inquiries, allowing business to even focus more on high-value tasks. Similarly, blockchain technology that's just coming up is also helping in enhancing security and efficiency in financial transactions. Businesses that have adopted digital documentation, like e-signature, like cloud storage, are already even seeing like a faster decision in making processes. So back to your question, when you mentioned how do we identify these processes? Well, when you are in an organization or in a community where processes don't move, right? They don't move fast. They are slow. They are delayed processes. There's bureaucracy within the process. Usually you will know that process is inefficient, and the onus just lies on the team to actually sit down, review that process, identify where the bottlenecks are, and create a structure around it to improve it. If it is technology that you're going to bring in, technology will simplify the whole process and even make it more faster, thereby improving the turnaround of the organization.
So what role, would you say employee training and engagement, what role do you see that playing in, minimizing waste? And how can companies foster a culture of, continuous improvement so it trickles all the way down, from the top and, to the bottom?
Yes, very, very, very interesting because, culture actually plays a significant role there in business operation and how business operates. One major barrier is deep-rooted reliance on bureaucracy. So many organizations have long and unnecessary approval chains, right, that delay decision making. Usually, employees often have to wait for top-level executives to sign off on even minor actions, which actually slows down operations. Another cultural issue is the heavy reliance on, having to have handwritten documentation, especially maybe in government areas and all that, even when digital alternatives exist. So many Nigerian businesses also prefer face-to-face interaction over digital communication. Of course, like I said, it's a culture thing. Slowing down processes that could be automated. Real life example is, you'll notice in many government agencies still rely on physical files and documenting processes. For example, the public servants often, need to submit multiple physical copies of forms of different offices before approvals are granted, leading to bottlenecks and inefficiency. Whereas those bottlenecks can be automated. You can just have a file that can be viewed across all systems, and approvals can just walk through all those systems automatically, and everybody can just approve, see it anytime, retrieve it anytime, which actually, helps, in improving the process. So like I said, culture is very key, but again, you can also help, culture can also be helped in ways whereby, you can bring in trainings, enlightenment of the people, to actually break that barrier of culture.
Right. Do you think it's possible to actually eliminate, completely waste in, business operations, or even if you reduce it, to a minimum, do you think, waste can somehow evolve and, come up in other ways?
Yes, so technically, yeah, ways can be eliminated, right? It can, right? That's why we have tools and methodologies, and you can always, minimize waste. Once you have, first step is to identify where the bottleneck is, where the gap is. Once you're able to identify where the gap is, it's now very easy to eliminate waste, either in customer service, either in financial transaction, either in supply chain, using tools, simple tools, as easy as, Power BI tools to actually read or see information real time, which will help you make decisions. So it can actually be eliminated over time. But it's a gradual process, of course.
All right, thank you so much for giving us tips there on how to eliminate waste when it comes to business operations, and definitely, because that will definitely play into your profits and revenue if you're able to eliminate such waste. Well, thank you so much. Sheyi Obadimeji is a product manager. Thank you for coming on today.
Thank you very much for having me, Ladi.
All right, the trading day is moving along just fast, but let's find out what's playing out in most of the markets that we track, and we have Anete Edet with the details. Good to have you again, Anete. You were supposed to be somewhere else, but you're here, doing it from here.
Yeah, Ladi, the last time I came, which I would lay that emphasis on the last time, that was when I did that, the live crossover, which we're supposed to be having. But definitely, like I mentioned, it wasn't one of.
Yeah, I was like, I would love to see you live on that floor.
Exactly.
But we'll get a chance to do that again some other time. So how's the market? What's playing out at this point? Are investors excited or just, mum at this point in the local bourse?
Well, Ladi, to be precise, I think I would like to have a stockbroker to speak more about that. But so far, if you take a look at it, this week hasn't been that much remarkable for the market because we've had about 2 days of profit taking, which is quite moderate, and then just a slim gain which was recorded yesterday. Was the market was up by a tad 0.02%, which is about some 10 billion naira. When we lost more than 600 billion naira so far about more than 500 billion naira.
Right.
Yeah, so far. Okay, so, but let's talk more about the market at intraday. Taking off from yesterday, where the market closed an uptick by a tad, but at the last close that we have here, the last track that we have here, 0.08%. So far, the market has been in between, give and take, about still within that 3.2% approximate month-to-date gain. While year-to-date at about 4.7% for the domestic burst, and 107,000 is still the level which the market is still trying to maintain if it does not go below that by the closing bell at 2:30 local time. But we're still looking out for how the market, the players in the market, are reacting to several number of factors that really determine the market's position in terms of earnings reports, corporate announcements, and so many others. We will be having our analysts to talk more about that. For the Johannesburg Stock Exchange, we also are red there, 0.47%, 87,907.69, while for the Egyptian Stock Exchange, as well as the Nairobi Stock Exchange, they were also mostly in the red that we see for the movement at intraday and for Wednesday's closing session for the Nairobi Stock Exchange. Now, for the Middle East, we take a breeze there. We see that the market was also mostly negative, except for the Dubai index, which eked out at intraday 0.07%. Abu Dhabi down by 0.29% at last track, while the other markets were also in the red. That's for the Saudi Arabia and the Qatari Stock Exchange. So they will be closing before the Ramadan holiday, which begins on Saturday. But in terms of trading day, the trading days, this is today is their last trading day. So the market will be resuming on Sunday, which is more of the start of their trading day. So that's it, a wrap for the markets for both the Nairobi, for the Africa and for the Middle East. So now let's talk about the Nigerian stock markets. Well, we're looking at the latest developments so far, and we bring in Mr. Tajudeen Olayinka, who's an investment banker and a stockbroker currently trading at the stock market, to give us details about the latest developments within the stock market. Thank you for joining us, Mr. Olayinka. Okay, we seem to have lost Mr. Tajudeen Olayinka there, but we surely would get back to him if we're able to do that, if time permits, to give us details about the current happenings at the Nigerian Stock Exchange trading floor. Okay, so now let's get to the U.S. markets, where that's the world's biggest economy. You just cannot shy away from the world's biggest economy, because whatever happens there always translates into the Asian markets as well as the European markets, which which is currently trading before it closes at about 5 o'clock Nigerian time. For the Dow Jones Industrial Average, 0.25%, S&P 500 0.56%, and the Nasdaq Index 0.63%. Talking about the Nasdaq Index, yesterday we saw, for the closing bell, we saw NVIDIA, which will be taking a closer look at NVIDIA. It released its results, which saw that the sales grew by 78% on AI demand. Of course, NVIDIA is a chip-making giant, which at the same time, it is warned that it is facing a stiff competition from its rival, its Chinese rival, that's Huawei. Huawei is also into the technology space, which is also making some revolutionary gadgets and devices, telecommunication gadgets and devices, while NVIDIA is a chip giant, which has also been making many very impressive chips there. So, but let's talk more about NVIDIA, where we see, first of all, from the earnings of NVIDIA, we saw here that, what I have here is that NVIDIA reported its fourth quarter earnings after the closing bell, which beat Wall Street expectation. And then the company has also provided strong guidance for the current quarter of the year, in contrast to what it saw last year. So we saw that NVIDIA report there, what we have there on the slide there. First of all, that the full year revenue for the company rose by 114% to $130.5 billion. And the company has also said that it would be facing so many stiff competition from NVIDIA. But take a look at the results there. For the fourth quarter of 2024, we see the revenue at about almost $40 billion. That's when you compare that to the $22 billion recorded in the third quarter of 2024, just last year, and that represents about a 45% year-on-year change. But the other news that we have here as a result of what we had there, the company, like I mentioned, it posted a strong revenue and profit growth, which was driven by, like we mentioned here, the Blackwell chip demand. Blackwell, what you call a super chip, is one of the major drivers of NVIDIA's strong performance. NVIDIA dominated most of the reports last year, dominated the market's performance last year, and also contributed to what you saw on the NASDAQ. In terms of gross margin remains strong, but faces slight pressure from new products, like I mentioned, from the likes of Huawei and some other tech rivals, which it faces. And then the stock's performance was volatile, with investors worried about the margin forecast and competition. And finally, that Blackwell chips and the AI advancements position, is still poised to put the company on the path of a growth, in spite of challenges, from its other rivals. So that's it for NVIDIA. But for an overview of Wednesday's trading session on Wall Street, our Washington correspondent Maria Bird will give us that detail in just a few seconds from now.
The U.S. stock market was mixed again on Wednesday, as the Dow Jones was slightly down at 0.4%, the S&P 500 was unchanged, almost flatline, and the heavy tech NASDAQ was slightly up at 0.2%. Many investors are watching to see what the president announces next, as it's clear that there may be tariffs on Mexico and on Canada beginning April the 2nd. There is also some speculation that the bloc could end up with 25% tariffs on cars. This is something that the president announced was long overdue, and that he's expecting to see some upward swings in the U.S. economy as a result. There is much still to know about whether or not the U.S. economy will be able to benefit from the tariffs the president has been putting in place over the last few weeks.
Our Washington correspondent Maria Bird giving us details about the performance of Wall Street. Of course, we saw that for Wall Street, there was a flurry of recent economic reports, including a softer than expected consumer confidence reading, disappointing retail sales numbers, and a weak consumer sentiment reading, which have rattled the stocks and also raised concerns about the health of the world's biggest economy. Like I mentioned, whatever happens in the U.S. always has a ripple effect on major markets across the world. Nigeria's stock market is not immune to that. So, but traders will be keeping an eye on Thursday's weekly jobs claims. That's from the world's biggest economy, and then they're also looking ahead to that much expected consumer expenditure price index report, which is expected to be released tomorrow about 2:30 Nigerian time. So that's a wrap for U.S. markets. And then let's take a final look at the markets that we're looking at now. That's for the Asian markets. We also see that Asian markets, well, they were mostly mixed, which comes on the back of fresh tariff threats from U.S. President Donald Trump, who was right from the start of his presidency, which is barely 100 days, but has rattled the market with tariff threats all across, from Mexico to Canada to China. Now that impact is also rattling markets across the Asia-Pacific region. So that's it for. We see the Nikkei was the only gainer there. The South Korea's Kospi down by 0.73%. Hang Seng Index 0.29%. Let's take a look at China. China there was up in the green, 0.23%, and this is coming amidst some reports that the country plans to recapitalize three of its biggest banks in the coming months to about to the tune of about $55 billion. That's about some 400 billion yuan. So the banks include the Agricultural Bank of China, the Bank of Communications Company, and the Postal Savings Bank of China. So Nigeria is not the only country country that is doing a bank recap, which would be the deadline is just for next, almost at this time next year, somewhere around March of next year. So, and that capital injection from Beijing would mark the first of such move since the global financial crisis way back in 2008. And for the India's Nifty 50 was down, closing Thursday's trading session by a tad down 0.01% at 22,545.05. So, Ladi, that's it for the markets. I don't know what your cue is for the markets.
Just waiting for the TGIF trade tomorrow. Let's see if investors get some kind of, relief, at this point. Some investors, it depends on where you're investing, at this point. Thank you so much, Nate, for giving us the details there. But let's take it on to Europe now. We see Europe is scrambling to amp up its defense industry after comments from U.S. President Donald Trump, all but confirmed a U.S. withdrawal from European security. Ukraine may also not get the security guarantees they were hoping for. That should actually come from Europe. Well, the U.S. president says for more on this fracturing transatlantic relationship. Let's hear more now from DWB correspondent Vada Imran in Berlin. Great to have you, Vada.
Great to be here, Laddie. Hi.
That was good to have you as always. But, break it down for me. What's the latest, with this issue at this point? We're seeing everybody trying to ramp up, defense spending, at this time.
Yeah, I mean, Europe is reacting to comments from U.S. President Donald Trump, where he said that Europe will have to take a lead in providing security guarantees for war-torn Ukraine when talking about the U.S.-Ukraine mineral deal. This comment, although not surprising at all, did lead to a flurry here in Europe as the region realized they will have to massively, and to be honest, quite quickly, ramp up their efforts to expand defense production. For now, as you may already know, the U.S. was the financial leader in this war against Russia, and the EU had was able to very much rely on this partnership, and so was taking their time to develop an internal security strategy. Even the French president's recent U.S. visit failed to convince Trump. The next trip is already ongoing by UK Prime Minister, who's already in Washington to reiterate Europe's stance on Ukraine and the U.S.'s role in this.
So Europe's defense industry would have to invest a lot of time, and billions to amp up this industry. What would you say is the way forward?
Well, the way forward is for European countries to start reorganizing their kitties to make way for increased defense spending. The UK has already announced a cut in foreign aid budget to make way for military funding, and development organizations in the UK are angry. Germany is looking to fast-track a defense fund financed by debt to the tune of 200 billion euros. But the question is, will this be passed in the current parliament, or will this be put on hold until the new parliament comes in effect? We'll have to see. The issue is that Germany's defense industry was mostly dormant for years before the Ukraine war, and it seems that Kiev's war has exhausted all the resources that were available here. If Europe is not fast enough in producing but really wants to acquire weapons it doesn't make itself, it may have to end up buying them from the US, which again leads money flowing out of Europe. To figure out a comprehensive forward-looking strategy, there's going to be an emergency leaders meeting of European leaders slated for next week.
All right, now let's turn to the markets. What investors see in this trading day?
Well, Laddie, it's no surprise that all these tariff threats and constant comments have been hard to digest for European stocks. And so the DAX is very much in the red today, down by 0.6% just now, and even lower a few hours ago, recovering from an even deeper dip that was happening this morning. Weaknesses observed in almost all of European bourses. European stock 600 is down 0.3% because there is a bunch of tariff-sensitive companies in there. Volkswagen shares are down 1.5%. Porsches were down 1.58%. BMW shares also down 2.6%. So all in all, a very red European market here. However, there is still anticipation of what the ECB has on the table with their next round of meetings scheduled to start next week. Markets and analysts predict a quarter-point cut in March, followed by more later in the year. And that's all from us today.
All right, thank you so much, Vada. Definitely not a good time to be tariff sensitive, definitely. But thank you so much for breaking it down for us, what's playing out in Europe.
Thanks, Laddie.
All right, now let's get a check on another commodity at this point, and that's natural gas. I remember at some point natural gas hit a high of about $9. That was $9. That was when the war was raging on, about $9 MMBTU, but now we're down to about $3.98. But yet to date, there's been a rise of about 8.8%. That's for natural gas. Let's bring in Miriam Ode now, she's an analyst with Financial Derivatives Company. Hello, Miriam. Well, looking at natural gas prices year to date, are we seeing some kind of recovery coming?
Good afternoon, Laddie. Thank you for having me. So yes, natural gas prices are already recovering because they are already higher than what they were before. And even the EIU has forecasted an increase in natural gas prices to an average of $3.7 per MMBTU. And currently we're seeing that it's about 3.6. So it is still close, even though we still have a month to go for the end of the first quarter. And the reason why we're seeing this recovery in natural gas prices is because of increased demand from Europe, which is one of the world's largest importer of natural gas. And the reason why we're seeing this is because in Q4 2024, when during the winter period, we saw that the cold winter required the Europe to tap into their gas reserves to meet up with the domestic demand. And now what we're seeing is Europe needs to import more of the commodity to fill back its reserve. And do we think that natural gas prices will remain this elevated throughout the year? Most likely, but there's still the possibility of a reduction in price due to the Russian-Ukraine war ending soon. Like you said, because of the start of the Russian-Ukraine war, we saw natural gas prices rise to about $9, and now it's 3.7 million British thermal units, sorry. And with the increase in Russian supply, indicates that this Russian-Ukraine war ends soon. With the increase in Russian supply, cheap Russian supply, this can weigh on the global price of natural gas in the near term. But this is still a possibility, but we still expect it to remain elevated.
Right. What are you seeing for global demand, for natural gas, and how can, a country like Nigeria, key into, the possibilities that come with higher demand?
Yes, Laddie, the global LNG demand is expected to jump by about 60% by 2040. And this is because of increased demand from Asian countries, particularly China and India. And what we're going to see is, since LNG is a transition fuel, we're expecting to see more demand towards that commodity, since most countries are looking for cleaner alternatives to fossil fuels. And Nigeria can benefit from this because remember that increased demand results in increased supply and increased price, and when the price of natural gas increases, Nigeria, which is a key exporter of the commodity, can benefit from this. But in order to benefit from this, we need to increase our production of the commodity. Because remember that currently, out of the 6 trains, only 2 are working, 2 are operational because of the theft and vandalization in the Niger Delta region, which is limiting the supply of domestic natural gas.
All right, thanks so much. I'll keep tracking those prices. I don't know, what's going to happen to actually push the price of natural gas up again, but we'll keep tracking that market. Thank you so much. That was Miriam Ode, analyst at Financial Derivatives Company. Thank you.
Thank you for having me, Laddie.
All right, let's touch on some quick stories now. Ghana is withdrawing a directive requiring ENI SPA to merge its offshore oil field with a discovery made by a local producer, potentially settling a 5-year standoff. The West African nation's new government decided to revoke a 2020 order. The Italian oil major and partner Vitol Holdings, BV, joined their Sankofa field with the neighboring Afina, operated by Accra-based Springfield Exploration and Production Limited. And Egypt has launched a new social package today to support groups impacted by rising prices worth about 200 billion Egyptian pounds, about $4 billion during the Ramadan and the new fiscal year. The new package includes raising the minimum wage for state employees to 7,000 Egyptian pounds a month, in addition to increasing pensions, providing cash support for beneficiaries of the Takful and Karama program by 25%, and support for farmers and the most in need. All right, now to another discussion now, and we're talking stable coins today and the impact on global trade and how people do business in 2025. To help us unpack this, we have Lansbury Choma Oludimu. She's the Vice President of Global Operations and Managing Director of Yellow Card. It's great to have you on the show.
Thank you so much.
Yeah, it's been a while.
It's always a pleasure to be here.
Always great to have you. So we're seeing the rise of stable coins, at this point. And, for some of our viewers that don't understand what a stable coin is, help us break that down and why we're seeing this rise in, use of stable coins, even for cross-border payments.
Thank you, Ladi. I think in the simplest form, stablecoin is a token pegged to an asset, a currency, right? And what's the ones we have in the market currently are like USDC and USDT. And these tokens are backed by dollar 1-to-1. What that means is 1 USDT is equal to $1. 1 USDC or 1 USDC is equal to $1. So if you have 20 USDT, is equivalent to you having 20 US dollars.
Right. So I guess that stability and that peg, helps it to be used for, a number of things. But it seems we're seeing, cross-border transaction now. And, some would say maybe they didn't see this coming, with the rise of, cryptocurrency. The early days, no one really saw, the use of stable coins, but that's changing now.
Exactly. I think the reason is because African currencies are under pressure, right? And we have to, and for us Africans, especially Nigeria, we're heavy on importation. What that means is we need to pay out money, we need to pay for goods and services cross-border. And because of the pressure on the local currency, it's like the local currency is volatile. And another thing is the liquidity of FX in the country, not just in Nigeria, but in the whole of the African continent, right? And because we have less in circulation, less FX in circulation, then there has to be an alternative for making those payments across border. And we have all seen over the years that stable coins has actually come in as a solution to this problem. So what we see currently is people making payments, cross-border payments with stable coins because they don't have access to FX, is in shortage, right? And also the local currency is not stable, right? The rate this morning may not likely be the rate in the evening. And we need something that is stable. We need something to serve as an alternative to make cross-border payments. We have so many businesses in Nigeria, so many businesses in Africa that are dependent on cross-border transaction, cross-border business. That's how the business works, right? And they have to make payments outside. So what we have seen, there was actually a report that was published by Chainalysis, and they did like an analysis of what happened within the sector from June 2023 to June 2024. And what we can see from that report shows that transactions in stable coins alone is about 43%. And transactions in Bitcoin was about 18.1%. What that means that a combination of transactions in Bitcoin and the other cryptocurrencies is lesser than the transactions that were actually conducted with stable coins. So you can see stable coins is evolving, right? It's gaining traction. And for the future, we see a future where stable coin will be like an alternative to the usual FX transactions.
Right.
And that's what we're seeing currently.
Quite interesting, because that eliminates a number of middlemen. Exactly. Looking at efficiencies.
Yes.
So talking about financial inclusion, we keep talking about we need to get more people financially included. Is stablecoin, are they playing any part in that?
Exactly. Previously we talked about cross-border payments with stablecoins. I think another big thing that is happening with stablecoins is remittance, right? And we're talking about financial inclusion. Like in Yellow Card, that's our vision. We want everybody to have access to financial services, irrespective of who you are and where you are. You should have access to financial services. So what stablecoin do for us is like a means to bring in everyone to this financial sector, right? You can imagine we have so many Nigerians outside the country, and they have families down here. Some of them even do investment in Nigeria, and they need to send funds back, right? If they do with the usual traditional way of sending funds back, you can see that there are a lot of businesses, there are a lot of touch points. If you're sending funds through SWIFT, you can see it leaves the sending bank, goes to an intermediary, goes to the receiver's bank.
And by the time it gets to you,
exactly,
how much would it cost?
Exactly.
To send that money?
Exactly. And let me tell you, Ladi, one of the things that made Yellow Card, or that made the co-founders establish Yellow Card, was to solve problems like this. Right? The CEO found himself in a bank, found a Nigerian professor who was trying to send money back to Nigeria. He was trying to send about $200, and the whole charge back to Nigeria was about $80. You can imagine you're in the US and you want to send money back home. You have $200 and you have to spend $80 just to spend the funds. So just to send the funds. So it means your family is receiving $120, right? But think of using stable coins for that, right? It leaves your wallet, it hits your family members' wallet.
How much does it cost to send, through, the blockchain?
Some chains, some networks are free, while others you just need to pay a token less than a cent, right? And the average cost of sending funds from outside the country to Nigeria. And for every fund you send, for any of those banks that have to process the transaction, it takes time, and also they need to deduct their transaction fees. So by the time the money gets to you, you have little or nothing.
Right, and you have to go and get more money to add to what you actually finally got. But there's still that big issue about regulating cryptocurrency, regulating stable coins. That conversation is still ongoing at this point, and I don't know if there's been any headway yet, when it comes to regulating this segment.
There is, or there has been, right, from 2023, 2024, and 2025. So things have really evolved. Regulators have come to understand that there is need to regulate the space, right? As you see the stablecoin evolving, cross-border transaction evolving, things are changing, new technologies and all that. The same way the bank actors are increasing, the same way they are getting smarter, right? So if we have to keep this sector sane, if we have to build integrity around this sector, there has to be regulation. And Ladi, what we have seen so far is an increase in interest and collaboration with the stakeholders, right? In Nigeria, we already have guidelines, and we have about 2 entities that have actually got the license, and we have others that their licenses are still being processed. So like they say, Nigeria is the big brother, right? This is not exactly the same in the rest of the African markets where we operate, right? We have in Botswana, we have a licensing regime in Botswana. Yellow Card was actually the first exchange to get that license. So Yellow Card is the first exchange to acquire a license within the African continent. We have a licensing regime in South Africa. We also have acquired the license in South Africa. We operated under the sandbox environment in Zambia. Zambia has a sandbox regime. So you see different regulators and different markets at different stages of regulation. Some are trying to build their regulation. Some have created a sandbox environment where players can actually operate under the supervision of the regulators, because they want to have an idea what is happening, and that would help them to put a regulation that is fit for purpose. And we also have some advanced markets that have, instead of having sandbox, they already have a licensing regime. Like I said, Botswana came out first, apart from Central Africa licensing regime.
So Africa is definitely moving fast.
Yes, Africa is moving fast. I think the most interesting part of this whole evolution is the interest and the willingness of the regulators to collaborate with the stakeholders. Right. All right.
So much to unpack there, and definitely, and it's still very early days, in 2025. I'm sure a lot will happen or evolve, in this segment. But thank you so much. It was great having your perspective. That was Lasberry Oludimish, who's Vice President of Global Operations and Managing Director of Yellow Card Nigeria. Thank you so much for coming on
today. Thank you so much, Ladi. It's always a pleasure to be here.
Thank you. And yeah, talking about the markets, definitely moving on. We know this market trades 24/7, and Bitcoin is still struggling at this point. We'll see how it plays out for the trade tomorrow. But thank you so much for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.